Okay, so welcome to tonight's class. Welcome to tonight's class. So this is class one of MAC3701, one of the 8 classes, and then after that we will go into the 3 revision classes. So basically the structure would be on the Google Drive, you should have access to the Google Drive. And on the Google Drive, I've put there some past question papers. I'm also going to save the Excel or the Google Sheets over there, what we work through, and I also have the plan over there. So for tonight, we're going to do a high-level overview on MAC3701 and the critical aspects. Because what's important to understand that we're going to cover basically just an understanding of the costing systems, which is absorption costing system and the variable costing system. Then we're also going to understand the allocation of overheads. So that two things together with how to structure an income statement for using the absorption costing method and an income statement using the variable costing method. So we're not going to do a specific question tonight, but we're going to go through that. Why this is important? Because this aspect of an income statement and the costing systems filters through literally every aspect of MAC 3701. So when they mention a certain terminology, you must know what they are referring to. So that is why I always spend the first lesson on this, because it filters throughout the various topics. So on Wednesday, we're going to do activity-based costing. And in activity-based costing, we're going to apply the absorption costing method. So that is why it's important to understand this aspect. So we're going to only have like an hour lesson tonight, but a full hour just going through that basic understanding, because this is going to filter through every single topic and or most of the topics. And not understanding this now is going to make understanding the other topics a little bit more challenging. Okay, so that is why we focus on this aspect. So I'm going to switch over into Google Sheets, and then I'm going to explain to, then I'm going to work through, sorry, then I'm going to work through the costing systems, which is variable costing system, the absorption costing system, the purpose of each of it, and when to use it, when not to use it, and so forth. Okay, or not when to use it, but rather when it is usually used, and so forth. Okay, so the costing systems is critical to understand, especially the terminology that gets used, because that filters throughout the scenario. Throughout the course. So now I'm going to switch over into Google Sheets, and then we're going to work through those aspects. Okay, let me just share. Okay, so you should be able to see Google Sheets in front of you. Like I said, this is in the Google folder that you have access to. Please make sure that you have access to it. If you're using a Gmail account, you should automatically have access to it. If you're not using a Gmail account, meaning the email address you supplied Edions with, if it's not a Gmail account, you most likely you will get an email. So the typical process for that would be you'd get an email to say that Edions want to give you access. Then you're going to have to request access. The email will come back to me, and then I would have to give you access after that step. That's just basically how Google Drive works for a non-Gmail account. If it is a Gmail account, meaning a Google account, then you would have automatic access. So all of it is over there, okay? So like I said, This, what I'm going to focus on over here is the costing systems, because it's critical to understand, like really understand the costing systems, as this filter through every aspect or almost every aspect of MAC3701. So when it comes to the costing systems for MAC3701 or for management accounting, we basically have two. So we basically have the variable costing system and we have the absorption costing system. Okay, so we have the variable costing system. Okay, so costing systems. So we would have the variable costing system and we would have the absorption costing system. Now, what's important to understand, another term for variable costing system is the marginal costing system, okay? Another term for the absorption costing system is the full costing system, okay? So just be aware they can change the terminology. So what you must understand is that the variable costing system is good for management decision making. Okay, so a variable costing system is useful for management decision making. The absorption costing system is required for financial reporting purposes. Okay, so that is why if a company uses the variable costing system, they will have to do the absorption costing system, because the absorption costing system is required for financial reporting purposes, IFRS. But the variable costing system is more useful for decision making. So let's understand why. In management accounting, a large portion of management accounting, if not the entire portion of management accounting, is about short-term decision making. Okay, the long-term decision making is more in the area of MAC3702 financial management, but the short-term decision making is more in management accounting. Okay, so we over the short term, or rather over the long term, every cost is basically variable. But in the short term, you're going to have variable costs and you're going to have fixed costs. So, for example, a fixed cost would be in over a short period of time would be your leasing. Okay, so when ShopRite enters into a lease, they sign a contract for 12 months or for 3 years or so forth. Okay, so just remember that. So management accounting is more about short-term decision making, and as a result, you will have fixed costs and you will have variable costs. Now, for management decision making, a lot of the decisions, they can affect decisions. They can make changes only with variable costs. They will not be able to make, they can't really make changes to fixed costs. Just to give you a simple example, when COVID happened, we all know COVID happened around about March 2020. When COVID happened, there was went into lockdown, right? You know, that the long period of lockdown. So many companies were scrambling at that time to ensure that they're going to have sufficient cash flow to cover the expenditure, because obviously revenue is going to be hit, right? So what do? The first thing they look at is the variable cost. They will obviously look at each cost and then they'll identify which costs can they stop, which costs can they cut, basically. What they would pick up is that fixed costs they would not be able to cut without entering into negotiation. So most management would have looked through their trial balance and look at the various cost line items, and they'll ask themselves, what can we cut? So generally, they'll cut discretionary expenditure. For example, they will cut learning and development. They will cut certain stuff that is easy to cut. For example, one of the companies I worked for, what they stopped was they used to provide fruit. They stopped providing fruit. And the argument was by getting fruit, changing too many hands, food, and all of those type of stuff, it will cause the spread of the virus even quicker. So that was a valid reason, but I think also part of the reason was that it was a way to cut costs. Same, they had a canteen where they subsidize part of the canteen. What they do, they stop that. The argument was by having other people come onto the premises with food and all of those type of stuff, there's gonna be a risk of spreading the virus. Once again, valid, but it was also another reason to cut costs. So basically, variable discretionary items, easy to cut. Fixed costs, where you enter into a contract, you have to pay it. Whether you make money or do not make money, you have to pay it because you entered into an agreement. That is difficult to cut. So that is why when it comes to management decision-making, in management accounting, in a short term, they want to identify what are the variable costs because they know those are the costs they can play around with in order to manage profits. Whereas fixed costs, they may be able to, but it's going to require negotiation. So, for example, like the retailers, the clothing retailers, when they closed down, they obviously needed to pay rent. But what would happen? They'd probably go to the landlord and they would negotiate with the landlord. Listen here, the shops are closed, we're not making money, we won't be able to pay the rent. But it's not something they can just decide to stop. They would have to negotiate with the other party. So that is the importance of variable costing. With variable costing, the key distinction is separating variable costs from fixed costs. Okay, so that's the important aspect when it comes to variable costing. Over here, over absorption costing, we said the reason for absorption costing is because of the requirement for financial reporting purposes. And this requirement of financial reporting purposes is basically the accounting standard IAS 2 inventories. So in IAS 2 inventories, the standard tells you that you have to use effectively the absorption costing method. So this method is more about the distinction between manufacturing costs versus non-manufacturing costs. Where the variable costing system, the distinction is fixed costs versus variable costs. So let's have a look how this plays out. So let's have a look how this actually looks. So if you had to do an income statement, it would look as follows. If you had to do an income statement, it would look as follows. Actually, let's first start off with a product cost. So for a product cost of a product, so for the cost of a product, it will look as follows. If a question says, dear student, please determine the cost of a product from a variable costing method using variable costing, then you need to know what makes up the cost of a product. So what makes up the cost of a product? It will be raw materials or direct material. It will be direct labor. And it will be manufacturing overheads. But what's important to know that manufacturing overheads, there are two types. So we have manufacturing overheads. Okay, so remember, when they say, dear student, determine the cost of a product, what must go through your head? That the cost of a product is made up of three things: direct material, direct labor, and manufacturing overhead. Same thing over here. The cost of a product, direct material, direct labor, and manufacturing overheads. Okay, so whether you're using the variable costing system or the absorption costing system, the cost of a product is made up of three things: direct material, direct labor, and manufacturing overheads. So whenever you read a question and you see the cost of a product, always tell yourself the cost of a product is made up of two things: direct material, direct labor, and manufacturing overheads. But now here comes the important aspect. Manufacturing overheads have two parts. Okay, so manufacturing overheads is made up of two types of overheads. You have the variable manufacturing overhead, and you have the fixed manufacturing overhead. So I always tell students, think of it like this. Cost of a product made up of three things. Tell yourself the three things. Then you tell yourself, after you identify the three things, direct material, direct labor, manufacturing overheads, remind yourself that manufacturing overheads is made up of two types of overheads, variable and fixed. And here's where the distinction come in. So over here, this is going to be variable manufacturing overheads, and over here, also variable manufacturing overheads. But over here, there's also going to be fixed manufacturing overheads. So the only difference between the variable costing system and the absorption costing system is the makeup of a cost of a product. So the difference between the variable costing system and the absorption costing system is the makeup of the cost of a product. The makeup of the cost of a product for a variable costing system includes only variable manufacturing overheads, whereas for absorption, it also includes fixed manufacturing overheads. So that's important to understand. I'm looking for you anyway. Okay, so that's very important to understand. So why this is important, I can't tell you how often this students' answers are incorrect because of thinking about this. And that is why I always say, when you see the cost of a product, always tell yourself the cost of a product is made up of three things: direct material, direct labor, manufacturing overheads. But then tell yourself, manufacturing overheads is made up of two things, or two types of overheads, fixed and variable. Now you tell yourself that for a variable costing system, manufacturing overheads only include variable. For absorption, manufacturing overheads includes both fixed and variable. Okay, very important. So the only difference between the cost of a product for the variable costing system and absorption costing system is that the absorption costing system includes fixed manufacturing overheads. Very, very important. Okay, so that's important to understand over there. Now, so that's the level of thinking you must work through. Just so you know that obviously in different questions will present these differently, and I'll show you the different ways they can share that information. Okay, so you must be able to know what of these three have been provided based on the terminology that they give. Okay, so that's just so you know. But ultimately, the base thinking is to tell yourself the cost of a product is made up of three things: direct material, direct labor, manufacturing overheads. Then tell yourself manufacturing overheads made up of two types, variable and fixed. Then you must know for absorption, it is both variable and fixed. For variable, it is only variable manufacturing overheads. Okay, so that's important when it comes to the cost of a product. Like I will tell you, you will see the importance of this when we work through other parts of the topic, particularly when we do CVP, break even, and all of those type of stuff. There's something that happens that we include that we shouldn't include. So I'll bring it to your attention when we come to that topic in our classes. Now, the next important thing is to work out is that of an income statement. Okay, so let's do the setup of an income statement. So remember, tonight's class, for those that just joined, that we're working through understanding variable costing versus absorption costing. Why? Because this filters through almost every topic within MAC3701. So having a good understanding of this will help us when we work through other parts of, when we work through the various topics. Because obviously the various topics will have their specific issues we need to deal with. So we will need to make sure that this issue of the costing systems, we have a good base, because that's going to be, because we're going to add on to this in each topic. Okay, so just so you understand, we're not going to do a specific question. In this lesson is purely understanding variable versus absorption. So now let's work out the income statement. And here you're going to see also a big difference. Okay. So under the variable costing system, how does an income statement look? Under the absorption costing system, how does an income statement look? Okay, so both starts with sales. Okay, so both starts with sales. Okay, but over here in the income statement, we want, in the variable costing income statement, we want total variable costs. Over here, we want cost of sales. So what happens? So for the income state, for the variable income statement, it is sales minus total variable costs, and this gives us contribution margin. Whereas over here, we get gross profit. Okay, so that's important to understand. So it is less. Okay, so remember this here is sales minus cost of sales give you gross profit. Sales minus total variable costs give you contribution margin. So in the variable costing system, we get to contribution margin. For the absorption costing system, we get to gross profit. We will come to these numbers just now. I just want to show you the big picture, then we will drill down into these numbers. Okay, then below contribution margin, we're going to have, so remember, like I told you, in the variable costing system, the distinction is between variable and fixed costs. Okay, the distinction is between variable and fixed costs. So over here, we can have total fixed costs. Total fixed costs is made up of fixed manufacturing overheads as well as fixed non-manufacturing overheads. Okay, so just be aware of that. So here we have sales minus total variable costs, and that gives us contribution margin. Then we say contribution margin minus total fixed costs. What is total fixed costs? Total fixed cost is made up of manufacturing fixed costs as well as non-manufacturing fixed costs. Okay, so it's important. The variable costing system distinguishes between variable and fixed. Above the line is variable, below the line is fixed. Okay, and that will give us our profit number. Okay, so that's important to understand. So with a variable costing system, above this line, above contribution margin, it is all variable costs. Below the contribution margin line, it is all fixed costs. Like I said, the variable costing system distinguishes between fixed and variable. Okay, so that's important. Then we get profit for the year. When it comes to the absorption costing system, remember I said the absorption costing system distinguishes between manufacturing versus non-manufacturing. So over here, we are interested in non-manufacturing costs. We are interested in non-manufacturing costs. So non-manufacturing costs is made up of variable non-manufacturing overheads as well as fixed non-manufacturing overheads. Okay, very, very important. Once again, we get to the same endpoint profit for the year. Okay, so we get to the same endpoint profit for the year. So, as you can see, above gross profit, above the line of gross profit is all the manufacturing costs. Below the line for gross profit is all the non-manufacturing costs. Over here, for variable costing system, above the line, above contribution margin is all variable costs. Below contribution margin is all fixed costs. Very important to understand that. So now we can break this down further. Okay, so now we can break these numbers down further. So let's have a look. So total variable costs is made up of the cost of a product. Okay, so what is the cost of a product? It is direct material, direct labor, variable manufacturing overheads. Okay, so remember it's made up of okay, and then it's also made up of variable non-manufacturing overheads. Okay, so very, very important. Over here, it is made up of direct material, direct labor, variable manufacturing overheads, and then fixed manufacturing overheads. It's extremely, extremely important. Now take note, the items highlighted in green is the cost of a product. The items highlighted in green is the cost of a product. Okay. The items highlighted in green is the cost of a product. Very important to understand. Okay, so the items highlighted in green is the cost of a product. Now remember I said students make a mistake when it comes to this statement over here. So one of the two things confuses a student and they end up doing the wrong thing. Okay, what you must understand, you must differentiate, you must distinguish between contribution margin and the cost of a product. If you're dealing with a variable costing system, you must make a clear distinction between contribution margin and the cost of a product. Remember, contribution margin is sales minus all variable costs. So contribution margin is sales minus all variable costs. So it is all variable costs relating to manufacturing as well as non-manufacturing. However, if they ask you for the cost of a product for the variable costing system, you only take into account the manufacturing costs that are variable. So all of this is variable non-manufacturing costs. All of this is variable non-manufacturing costs. So please make sure you don't mix this up, because remember, it's a fundamental principle. So they may be strict. So you obviously get it wrong in an exam, but the strictness come in, they may penalize you, meaning they may subtract marks because of a fundamental concept. So when a fundamental concept goes wrong, sometimes they also subtract marks in order to penalize you for getting a fundamental concept wrong. So you don't just get the answer wrong, you don't just lose that mark, they also subtract marks. So just be aware of that. So in your head, you must tell yourself, always be clear, always be on the lookout, always be aware of the difference between contribution margin and the cost of a product. Contribution margin is sales minus all variable costs. All variable costs means manufacturing variable costs as well as non-manufacturing variable costs. But if they ask you for the cost of a product using variable costing system, then you only include variable manufacturing costs. So you only include this. You do not include that. Okay. Remember, an example of variable non-manufacturing overheads is the variable selling costs or something of that nature. So it's typically a variable selling cost, like a commission. So that will be your non-manufacturing variable costs. So that does not form part of the cost of a product. What form part of the cost of a product is only manufacturing costs. Okay, so just please be aware of that. Once again, just take note that that above the line is variable costs, below the line is fixed costs. Over here, above the line is manufacturing costs, below the line is non-manufacturing costs. Okay, so just get that straight in your head. Okay, so remember, how did I start off with the income statement? This was my thinking. My thinking was as follows: sales minus total variable costs equal contribution margin. Contribution margin minus total fixed costs made up of that, give me profit. Then I said, okay, total variable cost is made up of all of that. Okay, so what I want to show you is the way of thinking. Don't think from the get-go like that. Do it in piecemeal until it becomes a point where you know it automatically. Similarly over here, when I did the income statement for absorption costing, I said sales minus cost of sales give me gross profit. Then I said gross profit minus non-manufacturing costs, which made up of this, gives me profit. Then I said, okay, cost of sales is made up of all of these. Okay, so that is how you want to train your brain to think up until the point come where you can think of it automatically from get-go. Okay, there's just one more thing I need to add in over here. Okay, so once again, one more thing. This is like the third step, basically. This is not always there, but you must just have a look out if it is there or not. So you must not forget, you must add opening balance inventory, and you must subtract closing balance inventory. Okay, so just be aware of that. So not every question have it. Okay, but if you do have it, you need to factor it. You need to bring it into account. So this is extremely, extremely important. So when it comes to variable and absorption, the first thing to know that the difference between the two is how you treat fixed manufacturing overheads. How you treat fixed manufacturing overheads. So in the variable costing system, fixed manufacturing overheads do not form part of the cost of a product. Whereas for absorption costing system, fixed manufacturing overheads do form part of a costing system, okay, of the cost of a product. So that's important to understand. So make sure you distinguish between cost of a product for each system. The next thing you must be aware of is the income statement for each system. How does it look? So basically, it will look like this. Okay, on a high level, it will look like this. Okay, so please make sure you get familiar with it. But what you must understand, if you don't get it now, it's fine. As we go through more questions, different topics, this thing will come in over and over and over. But this is extremely important for specifically for standard costing. Okay, so this plays a critical role in standard costing, but in every other aspect as well. Okay, so that is that on there. Before I move on to the last two aspects, is there any questions that you have? Alvina, Michaela, any specific questions you have, or can I move? Can I go? No questions? Okay. Now, I just want to fix up some terminology. So remember, what is the cost of a product? Cost of product, it equals direct material plus direct labor plus manufacturing overheads. Remember, depending on the system, depending on the costing system, it will determine which manufacturing overheads. Then you must also understand what is prime costs. Prime costs equal direct material plus direct labor. Okay, so they may say we're giving you prime costs. So you must know prime cost is direct material, direct labor. Okay. You must also know conversion costs. What is conversion costs? So conversion costs equals direct labor plus manufacturing overheads. So you must just make sure you're aware of that. Lastly, you must know what is variable manufacturing costs. Variable manufacturing costs. Okay, and that is going to be direct labor, direct material plus direct labor plus variable manufacturing overheads. So it's important just to know this because it will play a role in how information is presented. Okay, remember, cost of a product or manufacturing cost is the same thing as that. Okay, so just be aware of that. Manufacturing cost is cost of a product. So please just be aware of this. This plays a role in how they present information. But ultimately, when you think of a cost of a product, it is made up of three things: direct material, direct labor, manufacturing overheads. Which manufacturing overheads depend on the system. But remember, how they present direct material, direct labor, and manufacturing overheads all depends on those stuff. Okay, they can present it like that, or they can give it individually as in direct material, direct labor, variable manufacturing, fixed manufacturing. Okay, so just please be aware of that. Now comes the next, so that's going to be the last thing we're going to cover for tonight, and this is the next important thing. Okay, and this is allocation of overheads. Okay, and particularly fixed manufacturing overheads. Okay, so this can apply to any overheads, but for us, it's generally got to do with fixed manufacturing overheads. Okay, so because it's generally got to do with fixed manufacturing overheads, the allocation of overheads is only based on the absorption costing method. So basically, what you must understand, we have two costing methods. Okay, so you have the variable costing system, and then you have the absorption costing system, like we discussed above. What's important when it comes to the allocation of overheads, of fixed overheads, the absorption costing system is broken up into two types. Okay, so the absorption costing system, what do I want to say? Where overheads, the absorption costing system allocating overheads using traditional costing method, or allocating overheads using ABC. Okay, using ABC. Okay, so that is basically it. So that's important to understand. So I'm going to do this 1, 2, 3. So when you think of a costing system, you have two types of costing systems, the variable costing system and the absorption costing system. For the absorption costing system, what's important to understand that the absorption costing system, you either allocate overheads using the traditional costing method, or you allocate overheads using ABC. Now on Wednesday, we're going to do ABC, and that's why you need to know everything above. But let's quickly deal with overheads using the traditional costing method. Okay, so traditional costing method. And please make sure you know this formula, traditional costing method. They test this inside out, whether you know it or do not know, whether you are aware of it or not. So with the traditional costing method, we talk about something known as overheads applied. Okay, so I'm just giving you all of these kind of background. When we do a question, so when we deal with ABC, we're going to deal with all of this stuff. We're going to deal with traditional costing as well as with ABC. Then you're going to see how all of this comes together. But I want you to have an understanding of the costing methods. So we have the variable and the fixed, and the variable costing method and the absorption costing method. For the variable costing method, what's important to know that you can, for the absorption costing method, you either allocate overheads using the traditional costing method or ABC. Now, there's a particular formula that gets used all the time when it comes to the traditional costing method. So the question is, how do you allocate overheads using the traditional costing method? So the way we do it is by using the formula known as overheads applied. So overheads applied equals the fixed overhead rate. So overheads applied meaning the amount of fixed costs that you allocate to the cost of a product. So overheads applied refers to the amount of fixed costs that you allocate to the cost of a product. Okay, so that's very important. Overheads applied refers to the amount of fixed costs that you allocate to the cost of a product. So you say overhead rate multiplied by activity. Okay, so overhead rate multiplied by activity. I'll explain now what is activity. So how do you calculate fixed overhead rate? The fixed overhead rate is always calculated as fixed budgeted fixed costs divided by budgeted activity. Okay, so once again, that word activity comes in. So remember, the way you calculate the fixed overhead rate, or another term we will use, the predetermined overhead rate. It is budgeted costs divided by budgeted activity. I use the word fixed costs because we're mainly focusing on fixed manufacturing overheads. Okay, so the fixed overhead rate is budgeted costs or budgeted fixed costs divided by budgeted activity. So the question now is, what is activity? Okay, so activity is one of two things. So what is activity? So activity is that thing, or activity is that thing you use to allocate overheads. Okay, so activity is that base or that thing that you use to allocate overheads. So activity is broken up into two things. Okay, either an input or an output. Okay, So an activity can either be an input or an output. What is activity? Activity is that thing you use or the base that you use to allocate overheads. So the typical example of an input activity would be labor, direct labor hours, or machine hours, or labor costs. So when they say overhead is allocated using labor costs, or overhead is allocated using machine hours, or overhead is allocated using labor hours, then that is the activity they are referring to, and that's what we will plug in here by that activity and here by this activity. Okay, very important. So it's important to know that. Okay, an example of an output activity, just basically units produced. Okay, so if they're telling you overhead is allocated using units produced, then that is the activity they're referring to. Okay, it's important to know whether it's an output and input. It does not play a role now, but it does play a role when we come to standard costing. Okay, so it doesn't play a role now. All you need to know is that and that, but knowing whether it's an output or an input plays a critical role when it comes to standard costing. So that is basically an overview on variable costing versus absorption costing. And this is basically what you need to make sure you really know well, because all of this filters through in ABC, in transfer pricing, in performance management, in standard costing, in relevant costing, in CVP. So it basically comes through in almost every topic. So that is why it's important, really important, that you know this really well. Okay, so that's all that I want to cover today. On Wednesday, we're going to put this into action when we do an ABC question. So the ABC question we're going to cover is, it's one of the questions loaded on the Google Drive, and it is May, June 2018, paper 2. So there's an activity-based ABC question. We'll do a little bit more than that because the ABC question is about part C, and we kind of need A and B to answer part C. So we'll probably do A, B, and C, but the main focus is going to be answering the ABC question. Okay. Is there any questions from your side, Alvina, Michaela?
No, thank you. I'm okay.
Okay. Michaela, your side?
No questions.
Okay. So please make sure you try to, even if you don't watch the video, but go through this for when we have on for ABC on Wednesday. But what you will see, I will bring through those principles all the time, which we're going to come across it regularly throughout the various topics. Okay, but it's important that you can. It's very important that you distinguish variable costing versus absorption costing. Very important that in your head you understand what is a cost of a product for each system and how an income statement look for each system. Okay, that's the second. The last, what's important to know that overheads can be fixed overheads can be allocated using the traditional costing method or ABC. Okay, and the last thing, you must know how to use this formula when it comes to traditional costing method. This formula over here, and then that formula over there. Okay, we're going to use it constantly, whether you are aware that we're using traditional costing or not, but we'll use it over and over and over. So please make sure you become comfortable with it. But by the end of the 8 lessons, before we start the revision classes, you should be you should have a good grip of thinking through a MAC3701 question. Remember, my main aim is to make sure that you know the theory and you can apply the theory to any possible question. And that is why I focus more on how do you work through a question and the thinking process to actually answer a question. Because we're going to answer one question. You're going to work through 2, 3 exam papers. but you don't know what they're going to give you in the final exam. So that's why it's more important to focus on developing that way of thinking so that you can handle any question that come your way. So like I said earlier, on Wednesday, we'll have a class on ABC. In the weekend, I'm going to give you one question on ABC that you must try to answer. Then you will work through it and so forth. If you have any questions throughout the next few weeks, you can arrange a one-to-one session with me, which will be about 15 to 20 minutes. The whole point of it being so short is that you come to me with a specific question. We're not going to work through an entire question, an entire exam paper, but basically you work through a question, you try to figure out where you went wrong and you still can't, then you contact me. We set up a one-to-one session where you can ask a specific question. We work through that specific issue and try to resolve it. So you can do it multiple times. You will always just give me a day in advance so I can book you in my calendar. Okay. So thank you very much. I'll see you guys on Wednesday. Please make sure you can access the Google Drive. I've dropped the questions over there. Okay. If there's no other questions, then we guys are good to go.
Bye.
Okay, bye-bye.
Bye.